Good morning, everyone. Welcome to our Tuesday morning trading room. Yesterday did end up being a bit of a sideways type of day overall. There were good swings higher and lower, but not really going anywhere for the most part. The overnight as well, pretty quiet, and you can see the market actually opening pretty much where it left off. For a change, we don't have a gap either higher or lower. Looks like we're just printing our first in sync eagle signal, and that seems to be in sync across the board. So I would anticipate maybe the market heading a little bit lower to start. I think the short-term trend is probably down, but we're really not all that far from 6,700, which was a pretty influential number yesterday overall. We'll just give them a few moments here. I've never been a huge fan of opening range trades, but they can work if you have the nerve to do them. Yeah, David makes an interesting point here. Very often, if the overnight has something resembling a trend to it, very often the market will fade or move in the opposite direction of whatever direction the market had taken in the overnight. Now, this isn't much of a downtrend to fade. A lot of times we'll look at the overnight and it'll be in a very strong uptrend or downtrend. And it's like the first minute or two tries to resume the trend, and after that, for the next 5 or 10 minutes, the market tries to reverse the trend. So it's a good point. It's something to keep a lookout for. If you think the market has a strong overnight trend, then you can try that. You can try to set up to reverse it off of the open. Okay, a little bit of a trickle down. No real defined direction just yet. We're taking a little bit of a bounce here now off of the median line, which is part of our support and resistance suite. Sometimes it's helpful to get a broader perspective. I always like to have a daily chart, or if you like, you can use an hourly chart, or just something to give you a broader view. And, well, what are we seeing here? We're seeing a market that's sideways. I would say it's sideways. What I look for when I look at a chart like this is I look for big bars. I look for bars that have very little overlap, because what that shows you is it shows you momentum. So here we've actually got a pretty good little downside momentum the last 3 days, even though yesterday's session overall was fairly neutral. So if I had to guess, I would probably say today might be a little bit more bullish. Maybe the buyers are going to try to resume the trend from here. The market does like to do things in threes. Very often you'll see 3 days, 3 or 4 days move against the market, then there's a reverse. See, 1, 2, 3 up, 1, 2, 3 down, 1, 2, 3 up. This one tried to go down. Not always, of course. The market never does everything always, but 3 days down, maybe there's a chance we're going to see a little bit more bullishness today. So far, we're not getting a whole lot to go on. All right, we're still getting a little bit of a bearish push. We've produced a cloud crossover signal here. This now is going to be the second push opportunity on this one if the market rallies up from here. But we're so close to the lows that I would probably enter below the low. So I would probably set up a trade. Oh gosh, how much do I want to give it? How much room? We've been doing a lot of OCO type orders lately, just because the market is so sideways. I suppose you could do another OCO order here. OCO standing for one cancels other. When you do your OCO order, you turn your OCO on, and then you don't use your trade manager down here. Rather, you're going to right click on your chart and place your order. Now, it's important to remember these orders are live the moment you put them on your chart. And so you can set them and then move them around as needed. It's a good idea to have a stop strategy enabled, at least to start. Although the way the market has been going lately, speed has not been the concern. Well, we could get a little bit more aggressive with this. There, that's all I'm going to do right now, I think. Another number one signal. So the clouds twisting, untwisting, we get the little pullback, we get the signal. If the signal fails now and produces a buy signal, we should produce a number two. And there you go. There's the number two signal. I'm just avoiding trying to take the signal too early. This is a valid number two signal right here, by the way, but because the market is so sideways, I've just been a little bit gun shy about getting in too early. Of course, there is such a thing as getting in too late as well, which is not good either. Okay, we're making pretty good progress so far. we're hitting now the primary resistance line. If you felt a little better about it, you could roll your stop to break even, which is what I think I'm going to do. Of course, there is, we have hit our high probability profit objective. So there was the target up there. If you wanted to just grab your profit when you had it, nothing wrong with that. Are they going to give me this swing? I don't think so. Darn it. Well, does that mean the sellers are going to push it back, or that the buyers are going to take the market higher? All right, right now it's looking like taking profit on target would have been the way to go. A great question here from David. David's asking, have you experimented with the Raptor using different tick sizes? Actually, David, we did a ton of experimentation before the product was released, and which is how we came to settle on the tick sizes that we have for each of the instruments. But here's the thing with the Raptor. The Raptor is, the programming on the Raptor is more open than the programming on the other tools. Although you can change the tick sizes on the other ones as well. The Raptor does allow you to not only change the tick size, but you can also change your cloud sizes, you can change your brick sizes, whatever it is you need to change to make it work. So feel free to experiment. I usually just have two sizes. I have the standard size, and then we've got the alternate size for slower markets, and that is the 4-4-6 setting. So we'll have a 4-tick brick, and then in the Raptor itself, we're going to change the hawk brick size to 4 ticks in the programming. We're going to change one of the clouds to 4 ticks and the other cloud to 6 ticks. So you can see right now I've got the 446 setting on crude oil, because really crude oil has been very, very slow lately. And if I didn't have the faster settings, I wouldn't get hardly any signals throughout the day. The E-mini S&P is another notable market that requires the faster settings. Actually, any market that trades more than $10 a tick, like the E-mini, or if you're following soybeans or any of those types of markets, it's a good idea to try the faster settings. Otherwise, what you're going to get is you're going to look at your chart and you're going to get your daybreak lines, and it's going to look like this. Well, you can't day trade a market like this that only produces one signal a day. You could still position trade it that way. You could take a signal and then hold it for a day or two. But those are the only two settings that I really go with. But like I said, feel free to experiment. I think one of our room members, and I forget who it is right now, but they were experimenting with a 20-tick Raptor because they wanted a broader market view. And when you do that, if you change your brick size, you'll need to change your clouds as well. And here is just the rough relationship between the clouds and the tick size. You could figure this out on your own, but the large cloud is 1.5 times your brick size. So if you're going to do a 20-tick chart, this would be set at 30. The faster cloud is the same as your brick size, so that would be set at 20. And then the hawk brick is 75% of the tick size, so that would be set at 15 if you were going with a 20-tick brick. And the idea behind that is just to keep the programming constant. Otherwise, your cloud is going to scrunch up. It's going to be very, very tiny. You're only going to produce number one signals because there's not going to be enough going on in the programming to actually produce a number two or a number three. But like I said, feel free to experiment. And if you come across any interesting settings, be sure to let me know. Okay, wow, it looks like the market recommitting to the short side, missing out on that initial push, but we'll see if we can't catch something. Okay, so there were pretty good signals here across the board. Very nice first micro macro cross here on the hawk. Falcon also producing a trend change signal right there. the eagle not producing its trend signal, its trend change signal until right here. So a little bit later with the eagle, but again, that's to be expected. On a trending tool, it's not going to print signals too early. And here on the Raptor, we're getting our counter trend signal, or pardon me, our trend change signal, cloud crossover right there. David says often after a number one signal there is a pullback that you can use to catch the signal, and that's true. It's actually true for most of the signals. Very often there's going to be a little bit of a hesitation that allows us to do that second push entry. This one actually running a little bit further than normal. Usually it'll come down a bar, maybe two, and then you'll see a little bit of a pushback, and that gives you a level which you could short below. The eagle trend trader is really big that way too. Almost every signal that prints, there's a little bit of a pushback. So you see the signal prints, there's a little bit of a pushback. Well, the buyers decide to make a stand off 66.50-ish. I know we're getting some buy signals here. We had here on the Falcon the counter trend signal, on the Raptor and the Hawk as well. All of them turning out. This was actually a pretty decent number two signal because it was fairly far removed from the band, which is always your target. But I'm wondering what the trend is. I don't want to get too crazy on the buy side if the market is still heading lower, of course. So what I would like to see is I would like to see another decent test of the extreme. And then a reverse. That would make for a more interesting buy. Well, they're pushing a little bit. Yes, okay. David's asking, would you explain again the difference between the number 1 and number 2 Raptor signals? Most definitely. You know, in hindsight, we kind of put these in the wrong order. We should have done number 1, the beginning of a trend, number 2, the continuation of a trend, and number 3, the counter trend. But I don't know, it never occurred to us to do it that way. So the way it works is the number 1 signal is the beginning of a new trend. It is your cloud crossover signal. So what happens is when your clouds change direction, so when your clouds are stacked this way with what we call the soft edge above the hard edge, when both clouds are stacked that way, the market is bullish. When both clouds are stacked this way, the market is bearish. So when your cloud direction changes, when it goes from bullish to bearish or bearish to bullish, when your clouds cross and there's a little bit of a pullback into the cloud, sometimes this is actually quite a prominent pullback into the cloud, and then the Raptor prints a signal in the direction or in the new direction of the cloud, that qualifies as your number 1 signal. You're going to notice that you also get number 1 signals even when the clouds just get twisted up a little bit and then the market tries to resume the original trend. All right, so the clouds uncross. You see how they uncrossed right here? So they're in sync again. There's a little bit of a pullback, and then you come out with a number 1. This number 1 signal I don't find quite as inviting as when the market makes a full cross like this. To me, this is a more reliable version. The ones where the cloud just keeps twisting and untwisting, to me, this is more characteristic of a sideways market. The number 2 signal is the counter trend signal. Therefore, in order to be counter trend, you first have to have something resembling a trend. it's a little bit subjective, but at the end of the day, if it looks like a trend to you, then it probably is a trend. So here it looks like we've got a little bit of a downtrend. So that's component number one. We need something resembling a trend. Component number two, we need to have a test of the extreme. Now, a test of the extreme is what I refer to, and I didn't coin the phrase, but I think it summarizes it beautifully, is you're essentially getting a retest of the high or a retest of the low, and stop it. And it's showing you that the market can no longer continue in that direction. So here is a retest of the low. That would be a test of the extreme. Here is a retest of the high. You've probably heard these formations referred to as M and W formations, or 1, 2, 3 tops and bottoms, or ABC corrections, or whatever. They've got a whole lot of names. Whatever you choose to call it, the concept remains the same. It's the market showing you that it can no longer continue with the trend. So first of all, you have to have a trend. Secondly, you need to see a test of the extreme, and then the market or the raptor will produce a counter trend signal. It surprises me a little bit that this one didn't print as a number 2 signal right here, because this actually is a number 2 signal. You have to remember with the programming prompts that if the programming doesn't, or if the market doesn't meet the programming requirements 100%, it will not print the prompt. However, visually, you can still see that, yeah, okay, we've got a downtrend, the market comes down, it retests the low, it can't go lower, it produces a buy signal. That is now your number 2 signal. It did it again a few minutes later. I have a feeling what happened here was just a little bit too drawn out from the low. This one developed a little bit faster. Produce your counter trend signal, and there is your number 2 signal. You can adjust your number 2 signal in your Raptor. So if you go to your Raptor in your indicator window, and you pull down here to where it says Signal Parameters SE. Extreme retest sensitivity. This is where you can adjust how the programming views the test of the extreme. The higher this value, the less sensitive, the less picky the Raptor will be. I think by default it's set at 1.01. I find 1.25 fairly reasonable. If you want to produce more signals, try 1.5 or even 2.0. Minimum bar retest. This also has an inverse relationship. The lower this value, the more signals you will produce. The higher the value, the fewer signals you will produce. So the lower it is, the less picky it is. The higher it is, the more picky it is. I find five bars being a reasonable default. But like I said, it's a good idea to get used to anticipating the signals and not solely relying on the signal prompts. Initially, you're going to rely on the signal prompts, and that's okay. But you want to learn to anticipate them, because sometimes things are going to develop a little bit quickly. This signal right here, for instance, is what we call an early cloud crossover. Why? Well, it looks like, so this would be an early number 1. Because it looks like the market is making gains to the long side. The cloud's not fully crossed, but crossed about 3/4 of the way. And we've got our little pullback going on, and then we produce our signal to buy. So this, very often, a decent opportunity. a lot of times it's worth your effort to try to get in a little bit earlier versus a little bit later. I know lately I've been getting in late to signals, but it's just because the market's been so darn sideways, I've had a real hard time trying to get in too early or get in earlier. But you can see here too, now that the clouds seem to be crossing, you'll want to be on the lookout for that little bit of a pullback. Oh, here's our pullback. What signal are we going to produce if the market picks up the uptrend from here? Well, we're going to produce a number one signal, aren't we? And so that's what we're on the lookout for now. And lo and behold, there is our number one signal. All right, so it's worth your while to learn these signals. It's worth your while to learn to anticipate them. The Indicator Warehouse YouTube channel, just a moment here, I'll get it for you. If you go, oops, if you just do a search, YouTube Indicator Warehouse, here is the channel. If you subscribe to it, you're going to get all the updates, the rewatch the daily session. But if you go down here to the Raptor trading system, here's an overview of the Raptor signals. And here's another one about the Raptor, but this is the one that you kind of want to watch. I go through each of the signals in great detail. And the beauty of it is, once you get a basic understanding of the signals, go ahead, take your chart and just kind of scroll back at random and see if you can't identify the signals, if you can't anticipate them, and then see how each of the signals work out. And if the signal fails, see if you can decide why the signal failed. Like for instance, if this number 3 signal did not work out, you could look back in your chart and you could say, well, the market was a little bit sideways, or the market had no trend, or whatever. But if you can identify why the trade may not have worked out, that makes it that much easier to identify it real time as well. That's one thing about trading, is it doesn't cost you anything to practice. And now we're getting a cloud crossover to the short side. So the market fighting for trend here now. The number 3 signal, by the way, just to throw it in there for you Raptor traders, is a continuation signal. It's the hard edge bounce. So again, in order to be a continuation signal, the signal has to have something to continue. So there needs to be something resembling a trend. So for instance, when we're getting, well, I guess these number 3 signals worked out all right because there was something resembling a trend. But what I was going to say is, if there's nothing resembling a trend, well, then you can pretty much disregard the number 3 signals. But you need something resembling a trend, even if it's just a new trend, and the market's going to intersect either the first hard edge or the second, and then resume the trend, and that signal will be your number 3 signal. This is important, again, to be able to anticipate, because sometimes when the market is trending strongly, didn't get a good example here, but sometimes when the market is trending really well, you'll get a little bit of a pullback. It won't quite make the hard edge, but the market will come down, produce a sell signal, and then continue the trend lower. So very often, like I said, if it doesn't intersect the hard edge, it will not print a number 3 signal. But that doesn't mean that visually, sometimes you won't get a number 3 signal. Let's just see if I can find you something. Well, something like this, right? It's so close to the hard edge, but it didn't quite touch it, and it comes out with a buy signal. This would be very tempting to interpret as a number 3 signal, even though technically it is not. This one here, even though it did work out, that would be a little bit too far away from the hard edge for me to consider a number 3 signal. But it did work out, so it's the exception that proves the rule, right? I'm not going to waste a lot of time doing this, but maybe I can find one more. So you can see these number 3 signals here intersecting the hard edge after something that's resembling a trend, even though it's a little bit of a drawn out trend. And the seller's back in full force. Well, it's nice to see that the market's actually ranging today. Last couple days have been so darn quiet. Well, now that they're kind of on their way, I'm stumped for a little bit here until I get another pullback of sorts. Pullbacks almost always offering you your best opportunities to get into a trade. little bit stymied here. Got some yellow bars cropping up in this very nice 4-arrow consolidation. That is the only hawk signal I will take on yellow bars, by the way. Oh, there they go. Okay, we're back near yesterday's lows, and I think we might see a little bit of a pushback here. The trend is down. You just got to wait for a decent opportunity to get back in. I got caught chatting. Oh well. Wow, are they really not going to give me another chance to get in here? This is unusual, to say the least. All right, here we go. We're getting another counter trend signal. These number 2 signals tend to work a little bit better after a number 3 signal. We may get a green bar sell that we could try to buy the failure of. And the Falcon also starting to look ever so slightly bullish. So there's a couple of things going on here. All right, well, we haven't really shown anything, but here now is a green bar sell. This tends to be a weak signal in the hawk, and it tends to develop near the end of a downtrend. It is a counter trend signal, so what you're looking to do is you're looking to buy a failure of the signal. In other words, once it trades above the high. You can always just use these as a early warning that the market may be reversing, and you can actually wait for that first micro macro cross signal. All right, here's a little bit of an uptick now. Yeah, David says, I think the number 2 signal is suspect because it's too early. Well, yes and no, right? You got to take it in context. A very big downtrend, so there's obviously some strength here. This number 2 signal, not as pretty as this number 2 signal. Why do I say that? Because this one actually has a better looking test of the extreme. Here's the low, here's the retest, here now is the buy signal. A lot of times with counter trend signals, you should take profit on target. Target for this trade would be the hard edge. So we would expect a retrace here to around the 66, 33, 34 area. I've mentioned this before too, but an easy way to get comfortable with your signals is just to, go back in your chart, play it forward a bar at a time, wait for a signal or see if you can anticipate the signal. And then when you get the signal, decide what you're going to do. Am I going to take this signal? How would I set up this trade? Would I choose to enter on the hash mark? Where am I going to cover the position? And just see how your trade works out. And see if you can't learn from that experience, whether the trade works out good or bad. Because you're going to be doing the exact same things real time. Okay, here now the counter trend position. So after the failure of the green bar sell, you can see we're producing a first micro macro cross, and this is typical. They tend to develop in the same neighborhood, more or less. The big push now from the sellers. Okay, once we take out this high, then I can probably start to roll my stops up a bit. Oh, if they get above the high. Wow, look at that sideways. Sidewaysness. Crazy. This is a very bracketable range as well. buy above 66.30, a short below the lows. I don't like it when it goes sideways this much. It usually means that the sellers are going to knock it down. And now we're getting our first micro macro cross lower. Not done yet, but close. Not holding out a lot of hope at this point. And there you go. So, you know, if I were smart, I would have just taken the profit on target. Yeah, they were taking a little bit too long to get above those highs. So the sellers still kicking the buyers in the teeth. Wow, we're only an hour into the session here. It seems a lot longer, doesn't it? All right, well, we will just wait them out here for a bit. Here is a possible late filter entry signal on the Falcon. This tends to be a pretty reliable signal. And let's see, they're going to give me a second push opportunity, maybe kind of. Can I risk it up here? Ooh, that's just a little bit out of reach. So we got the second push opportunity. I can risk it to the crest in the, or partial crest in the trend line. And then the trend line changes color, so that voids the signal. Oh, and here now a hard edge sell. Okay, and I'm a little bit late on that one too. Doggone it. Well, let's see if I can get a second push on that one. There we go. So this essentially kind of a bear flag type arrangement. This too, by the way, a bracketable type trade. Maybe we'll do an OCO on this instead. We'll look to buy above here, sell below here, and just kind of let the market decide which way it's going to be going. All right, and we're going to stop in play now. And I'm actually going to give my stop a little bit more room. I wanted the crest here on the clouds. Well, I'm not liking that the market is moving too much sideways again. That is problematic, and it may require me to get a little bit more aggressive with my stop here. Maybe bring it in just above the hard edge of the trading band. Delete the break even, just in case the market pushes lower below these lows. They might be done. Well, I don't often reverse on a signal, but if they break the high here, this is a signal where you may choose to actually reverse and look for that number one signal as it produces the other way. David says 6,600 may be a major support area. Anytime the market hits an even number, 6,600, 6,700, 6,800, 7,000, those are all important areas of support or resistance, as the case may be. Next most important will be the halfways, 6650, 6750, 6850. To a lesser extent, the tens, 6610, 6620. All right, so now I'm going to look for that cloud crossover and for a chance to buy the market up because it looks like the bottom might be in now. Yeah, I know. Scott says it's going from channel moves to channel moves. It's crazy when the market trades that way. It makes it very difficult to trade, or I find it more difficult to trade. But I think the bottom is in, so you can just look for your buying opportunities. We got a trend change signal here on the Falcon. We got a first micro macro cross on the Hawk. Here now is going to be our number one signal on the Raptor. So we got a little bit of a pullback. The next buy signal will be the number one signal. So the clouds not fully crossed, so I guess this would qualify as an early number one signal. Oh, I'll just get ready. There it is. Oops, got in with one too many. Got a little excited there. You got to be careful when you hit your buy and sell market buttons that you don't want to get too carried away. Oop, there we go. So proper stop is down here below the lows. And this market should have some room. So 66.30 is a secondary resistance zone. 66.52. That would make for a very good target for this trade. We've had to wait for a while for this this pullback to occur, but we finally made a higher high. So we should anticipate two moves in the new direction. So this is move number one, the one that broke the high, and now we should anticipate one more move in that direction. No, they're just not giving us the follow through just yet. So they're still chopping about a little bit. They're probably going to try to head a little bit lower, retest the lows one more time before possibly heading higher. All right. A little bit more follow through. So you can see how very often the early number one signal is a best way to get in. The next signal, now that the clouds are fully crossed, the next signal will be the proper number one signal. Come on. Okay, here we go. All right, got profit on part of the position. Next target, or the big target, like I said, up here near the lows of the morning, near the primary support line, 66.50. I would love to try to get the market back up there. I think that would make for a very good move here this morning. And is it time to move into parabolics or something more aggressive? All right. There might be one more little hiccup along the way here. We'll see. We've got a couple of bars, you see, with these tails on them. So there has been some bearishness there. Maybe this will be enough to push the sellers out for the time being and a little bit of profit taking. Come on. A little bit of a reaction now as we get close to the secondary resistance line. Hopefully they're not going to look too far back. right, just a little bit too much pushback there from the sellers, but I think we're going to see the market maybe give us one more little move lower here, maybe come back, give us a hard edge bounce. I am almost certain there's enough left in here for one more push higher. But pretty decent little trade and a good way to end the morning session. If you are going to continue this afternoon, I don't think we're going to see the buyers mount a full-on rally. Rather, I think we're going to see the market maybe enter a little bit of a sideways drift. I do still think 66.50 is a plausible target, after which, like I said, the sellers are going to push back, and after that, it'll be anybody's game. So if you're going to hang in here this afternoon, that's what I would anticipate. Another leg to the upside, followed by a pushback from around the 66.50 zone. All right, gang, I will see you again tomorrow. We'll talk to you then. Bye for now.